SolarCity is a US-based renewable energy services company. It offers installation, ongoing monitoring and repair services of solar energy systems. It has a market cap of $1.8 billion, trades on a PE of infinity because it doesn't make much money yet, and pays no dividends. So this is Elon Musk, his cousin Lyndon Rive. They thought up of this concept whereby instead of selling solar panels and systems to homes, they would rather lease it. So you, as a client, you contact SolarCity, they do the whole installation for you. You stop paying your electricity bill to the utility, you now pay SolarCity a monthly bill to lease your equipment.
Look, very similar business model, you can argue, to Tesla. Massive negative cash flow, huge need for financing, but strongly growing customer base and market. And as we discussed earlier on, the costs are coming down. So now in America, it's not quite there yet, but it's almost comparable cost-wise to buying electricity. And the market has gone mad. But very similar, as I said, very similar to Tesla in a growing startup type of company. You know, revenue was up 64%, which is great, but expenses were up 300%. And they chewed negative cash of $900 million last year, installing capacity, and they do lots of asset-backed financing. In fact, you can argue that they're not a finance house, but financing an installation is a major part of their business. So they lease it out. They go to banks and raise capital. You can take out a loan from them. So very, very cash negative story. But in the last 3 years, the percentage of solar generated of America's total power has gone from 0.5 to 0.9. So that's a massive increase, and it's still only 0.9% of it. It's still tiny. So they've got a huge runway up ahead of them. And this is proven technology. There's nothing new in all of this. It's actually proven technology. And as they themselves source more and more components or manufacture more and more components, and you start getting true economies of scale coming through, costs will continue to go down.
Well, let's have a look at the share price there. And as you can see, it's also crazy volatile. I mean, you could have got in at $50, $60, a month ago, and now it's at 26.
But this is very typical of a startup or new technology, new idea type company. Share price will go through the roof. People will be disappointed because at the end of the day, these chaps never deliver on positive cash flow or profits when they say or when it was anticipated.
But the model
as the market grows, you just put more and more and more cash into it because that's your business model.
The model sounds really exciting. It sounds like it will work because obviously the initial capital outlay is what puts a lot of people off. So, I mean, why not just swap a lease payment for your utility bill? And you're getting incentivized by the government because there are tax rebates, which the client gets, and SolarCity also get rebates for the installation and the cost of the product.
And they've also gone into the whole battery story now with Tesla.
The power wall with Tesla.
They're doing exactly the same thing.
Because storing this energy is also important. If you don't have sunshine for 3 days.
Sunshine, you've got a problem. But look, lucky lots of parts of America in the south that's got plenty of sunshine like we have. So this is a true growth industry, and there's no real competition per se because this is proven technology. It's just a case of, can you package it nicely? Can you give the right financing? And they seem to have got this in order. I mean, obviously there's competition in this market. At the moment, they are by far the biggest, and competition will come in.
Hot or not?
I'll go hot on this one. I like the idea. I like this idea.
I agree. I'm also going to be hot on SolarCity. I think the future of energy is certainly through solar.